numbers itself. It's the fag end of the third quarter earnings season. Arvind Fashions reported their numbers. The Q3 was impacted by weak consumer sentiment, muted festive season as well. They've added about 31 exclusive brand outlets in the third quarter. We do have with us Shailesh Chaturvedi, who's the MD and CEO, joining in. Thanks a lot, Shailesh, for joining in. But consumer sentiment is weak indeed. 5% revenue growth in an otherwise strong, seasonally strong quarter for the festive season, which also moved into the third quarter this time around, is telling, right? I mean, when do you see improvement, and what is it that you're doing to improve ahead of the market here?
So, we had a good quarter on our profit side. And, the numbers on the revenue side got impacted because of the cricket during the Diwali. So we had 7 India cricket matches right at the peak of Diwali weekends. That impacted. But good news for us is that our offline channel, which is our retail, our own MBOs, our own department store, grown at 11%, double digit, when the market is more or less flat. The numbers that we have seen in the industry are flat and muted, and our like-to-like same store growth also is positive at 2%. So we have good, and our whole strategy of profitable growth is working out. EBITDA has grown at 18%. We continue to focus behind our 5 power brands, and we believe that will help us to grow our sales and profit strongly.
Okay, so when you say strongly, can you give us an outlook, Shailesh, in terms of what Q4 would probably look like, say, when it comes to revenue growth as well as margins, as well as what you would probably follow through when it comes to FY25? Earlier guidance was around 10 to 15% revenue growth with around 100 to 150 basis points margin improvement. Does that stay?
So our strategy, like I said, is profitable growth, and we've grown EBITDA at 18%. Our EBITDA grew up by almost 150 basis points in this quarter. And what we are seeing right now is the Q4 is trending very similar to Q3, which will also mean that our offline channel will continue to grow at double digit in line with our guidance. Our online, there are 2 components of our online business. One is the B2C marketplace model has doubled this year, and Q3 also is double, and we expect that growth to continue. But our wholesale B2B in the online, we have destock, and they're seen a large, decline in the primary billing that we do to that channel, and that has taken our revenue growth down from 10% in offline to overall 5%. And we see the destocking in the B2B wholesale will continue for some more time, 1 or 2 more quarters. But overall, other growth engines are active, and we believe that our offline channel will continue to grow as per the guidance of double digits. So our store expansion, our like-to-like growth, our adjacent category build up and digitalization will continue with B2C efforts. So we believe that our medium-term guidance on revenue growth continues. We have 1 or 2 quarters of decline in B2B online wholesale business, but otherwise our growth engine and our profitable growth story is intact and is working well.
All right. So, that's good on you. I just wanted to know about the power brands itself. What are you doing to, sort of re-energize them? We all know about the inherent strength in brands like US Polo. We have Tommy Hilfiger, Calvin Klein Arrow, Flying Machine itself. But these seem a little jaded, so you got to re-energize them, right? At what rate are you, investing in re-energizing them, and when do we see them pick up once again?
That's the focus is on revitalizing growth. If you look at our growth rate last year, we grew at more than 30%. This year also we are growing our offline at double digits. So our brands are gaining strength. Our brands are gaining, market share. And if you look at the profitability, and our focus has very clearly been profitable growth. So our margins have improved significantly this year. Also at a YTD, our EBITDA is up by 100 basis points. We track the market share in department store and online spaces. Our brands are gaining market share consistently. Last year, US Polo alone had grown more than 600 crores in a year. On top of that, it's further growing, and it become now the largest sort of brand in its own segment, very close to 2,000 crores. So we are, investing behind the growth of these brands through store expansion, through growth of adjacent category like footwear, innerwear. We have upped the marketing spend on our brand. So this quarter, our EBITDA has grown at 150 basis points, but our marketing spend has gone up by 130 basis points. Otherwise, our EBITDA would have grown at close to 280 basis points. So our brands are very salient. They are top of the mind and gaining market share.
Right. Just one question before we let you go. You did speak about the adjacencies. What proportion of your sales right now are innerwear and footwear? How much do you expect that to be going forward?
So look at US Polo, where we have really invested ahead of the time there. The adjacent category now more than 15% of the US Polo brand. A similar case is in Tommy Hilfiger. It's also slightly higher than that. So these categories will continue to grow faster than the industry, faster than the overall brand. And in times to come, they will cross more than 20% of the revenue of a very large scale. US Polo, I'm talking about close to 2,000 crore scale. In that, it's at 15, it's crossed more than 15% of the share.
Okay, when you talk about that scale, when do you probably expect it to come through? Are we talking about FY25?
No, our guidance is on the revenue growth is, we will grow at 10 to 15%. Right now, actually, our growth is 10% plus in all our channel except B2B wholesale. And in medium term, when the market improves a little bit, we are very committed that 12 to 15 guidance will be valid. And we are very hopeful that, we will continue to grow at that point. Having said that, quality of sale is very, very important. And this growth in EBITDA, and we have a guidance of 100 basis point increase in EBITDA, that is also a North Star. And we will make sure that, the EBITDA grows faster than the sale growth. And this quarter also, we grew our EBITDA by 150 basis point.
All right. We're going to leave it on that note, Shailesh, and hope your North Star dreams do come true. Thanks very much for joining in and speaking with us. So that's Arvind Fashions. We need to take a short break. On the other side, we'll focus on M&M, which is one of the top gainers today.